GM mates, time for another episode. Today I have, I think, a man who needs no introduction because this person literally has the shortest LinkedIn experience that you will ever see, and yet has made millions. And he's not even 25. Am I right, Dean?
Yes, not quite yet. Still a few years to that.
I entered the industry when I was 16, and like I formally entered in at 21. And by the time Dean was 21, he had already made a million plus for 40 IQ and was CEO. So it truly is a fascinating conversation to get into. Dean, thank you so much for being here today.
Well, thank you for having me and the kind introduction.
So, Dean, is an alternate universe where you might have actually become economist or an investment banker, and that to going into writing and then becoming an operator and then becoming CEO of an agency. What has that transition been like? Like, how do you go take a completely different path? What was the aha moment for you? How did you end up going down the path that you end up going down on?
I actually do think there are a lot of similarities. The way I see economics or finance is fundamentally just problem solving. And I think that's the same, whether you're a management consultant, whether you're in investment banking, whether you're in sales and trading, or agency or crypto or marketing. I think you're faced with a problem and you need to do whatever you can to solve it. And that was a similarity between what I was studying at uni and even before that at school. When you're studying maths or financial maths, you get given a problem, whether it's differentiation, integration, hypothesis testing, whatever, some data set of calculus, and you just do whatever you can to solve it. So I just enjoy solving problems regardless of what the problem is. So that was the similarity. As to how I stumbled here, very serendipitous and largely due to crypto Twitter. So I can thank Elon for that.
That's interesting because when somebody thinks about 40 IQ or somebody thinks about you, especially people who followed you for a while, some of the other podcasts that I've seen you go on as well, people think about you more from a creative storytelling standpoint. But this is really fascinating that you actually look at it more from a data standpoint and like more tangible, like an analytical sense to that. Talk a little bit more about like how do you, especially with 40 IQ and the campaigns that you're running, the founders that you're working with, the teams that you're working with. The perception is you're a creative agency. But from what I hear, it feels like there's a huge analytical part to it that people are maybe not seeing. Talk a little bit more about that. Dive deeper into it.
Yeah, I'd say I've built a team of creatives around me. I was very cognizant of the existing team's skill sets, what I was good at, what I was not good at. And I've hired to offset some of those and to double down in some areas. I always recommend being data backed. And frankly, I do think that is an edge of ours. I spend a lot of time, probably too much time on Excel. Just looking at models and whether it's margins, revenue to employee, financial dashboards, whatever the metric is, I think all the answers are in data, and data numbers don't lie. People lie all the time, but numbers don't lie. So I think all solutions are in there. It's helpful in terms of goal setting, creating a vision, clarity. It helps with the leadership. And that's what we were good at from day one, and we still are. So we've had to hire to offset that, to hire more creative people who are insane at writing, at branding, at copy, at socials. So I think now we've got a really good balance, whereas most agencies or individuals or companies within marketing are the opposite. They have really good creative, and then they have to build the business infrastructure and understand the data. I think it was the opposite for us, where we're really good at the business infra and the analytical aspect, and then we've hired for creative, which has set the necessary foundation to allow for this sort of quick acceleration.
And I know you talk about almost like the mentality of just go do certain things, experiment, then do a few iterations, then figure out what's working, what's not working, and that is when you actually look at the data. When a lot of the times I feel like, especially on crypto Twitter, we sort of get obsessed with, and it's been a trend that's going on even more now. We get obsessed with things like Mindshare, how many impressions we're getting, what data is telling us. But in a certain way, you're actually maybe not looking at the metrics that are really moving the needle for you. Data becomes an obsession, but sometimes in the wrong way rather than the right way of looking at it. I wanted to understand, especially from like a personal standpoint, the philosophy of just like going and doing things and building experiments and then sort of figuring shit out as time goes by is a very I like to call it like YC mentality almost, which is like, okay, you have to do something that people want and you have to do it over and over again. And then you experiment and you get data points out of that. As a young founder of an agency, of a creative agency that is maybe more analytical and is building like a Avengers team around them to be creative, talk to me more about where does that philosophy come for you personally as the CEO of Fortyiq? And how do you deploy that for the rest of your team as well and get everybody thinking in the right direction?
So I think the first thing is for almost anyone in crypto, unless you are Satoshi or Vitalik, you haven't done this before. I have not grown an agency before. I have not even created a successful startup before. So all of this is new. The people I'm working with are new, the industry is new, the idea is new, the service is new, everything is net new. So we have been decently successful, but for me to come here and purport to be like this really successful entrepreneur, like Mark Zuckerberg or whatever, who has these sick ideas, I can't do that. If I was Zuckerberg or Bezos, I'd be like, okay, cool. This is the action we should take. And I have a really high confidence interval that it would work. So don't worry about any other data. Like, don't worry about experimenting. That's just a waste of time. That has high opportunity cost. I know what works because I've done it before. That case, it's different. Anyone who says that in crypto is probably chatting shit because they haven't done it before. So for us, it's like, okay, we know what we know and we don't know a lot as well. So when we've done things before, we can emulate that and copy that strategy with that confidence interval of success. A lot of stuff we don't know. So I'm just like, cool. There's a lot of unknown unknowns. What's the way to figure that out? Experiment, throw a bunch of stuff at the wall and just look at what sticks. So that's where it comes from. It really comes from knowing what you know and knowing what you don't know. And I think it's just brutal honesty and integrity within your team, being like, look, has anyone done this before? Does anyone know the formula, the playbook? A lot of times the answer is no. So I'm a big believer in a high volume, still, calculated, but a high volume approach and just really taking every piece of data and iterating upon that as quickly as possible.
What's interesting is like, especially with a lot of Gen Z founders now, because so many of them are building companies because it's got easier to build a company. It's become easier to build a product and, launch to market. One example that I have personally been really fascinated by has been Cluely and the campaigns that they have run and the massive, I mean, talk about mindshare, right? You have so much mindshare that you get the best VC in the world to sort of listening to your tune, no matter how controversial you are. I wanted to understand from your perspective also, being a Gen Z founder yourselves, what do you think the corporate mentality of, okay, we'll sit down, we'll plan for 30 days, and then we'll execute on a campaign. And now it has sort of become like things are moving way too freaking fast for us to sit down and have a committee about launching a campaign. And sometimes you just have to take risks with marketing. Talk to me about from a founder who's themselves is Gen Z, is working with a lot of Gen Z founders. Walk me through the process of marketing risk when you talk to these people. Like sometimes it's a little bit okay to be outside the norm and not sound like almost corporate-ish in your language. How do you make that transition? How do you make people think about it and how do you set up like a system around that?
The biggest risk is taking no risk. I think you see a lot of companies who sit around in committees, in meetings, have their structured agendas and take 30 or 60 days looking through fancy slide decks who do not execute. And that's why a lot of people take the piss out of certain management consulting companies, whether it's like PwC, Deloitte, like, what do consultants actually do? Look, obviously that's a generalization and they're very, very smart, but there's truth to an extent that a lot of it is just decks and saying increase your margin or whatever. I don't know. So I lean on the other end of the scale whereby I think execution is everything. I personally hate the word strategy because what does it mean? Strategy is nothing without execution. If you think about an individual who purports to strategize, I think you slowly get out of touch. Business is a dynamic market. Things change, the world evolves, the market evolves. Everything is getting commoditized now. Like you just said, products are commoditized, which is why distribution is imperative. So in a world where business is dynamic, last year's strategy is not this year's strategy. Therefore, the only way you can learn this year's strategy is by execution, which is why quick firing and iterating from data is imperative. That's why Cluely's approach works. They just fire off so many clips. Literally just imagine an AK-47. They're shooting so many rounds, so many fucking magazines. It's impossible not to learn. Like you would have to be an idiot not to get it right from that massive data set. So I think they're taking the exact right approach. They know distribution is everything. They know products are getting commoditized. They know things are dynamic. Like it used to be long form was the playbook. Then it was short form on socials. Then it was video. Then it was podcasts. And now maybe it's live streams. Like it's just always iterating. A person who's just a strategist isn't going to figure that out without doing it themselves. So I think it's very hubristic to purport to just be a strategist. You need to be doing both. Strategy comes from execution.
It's almost such a contrasting view now that I see a lot of my I don't want to say that, but my older friends struggle with is that sometimes you really they understand the value of experiments, but I think one of the things that they're struggling with is just the pace at which things are moving at some points in times. You talked about the meta, right? The meta keeps shifting. What works keeps shifting. You as an agency who's working with founders and building their personal brands up, obviously like writing and content writing was a huge part of that. I feel like now that meta has become video content. How do you talk to founders who are more technical, maybe a little bit more shyer, and like aren't that comfortable in front of like the camera, but they need to produce video content because like people need to see your face and hear you talk and understand your perspectives that way. Like how do you do that?
Yeah, so there's two things. And I also think this is just a helpful tip for anyone that's trying to do their own video content. First one will be a bit harder for the audience to do, but we literally have an in-house psychologist to talk to them about whatever their fears are and to overcome that. And they act as an interviewer, and we literally do breathing exercises at the start of a call to make them feel comfortable. I think getting clients and people over psychological fears are imperative. That's like something we do. That's a major USP. Second thing is finding a forcing function. And what I mean by that is they pay us a large amount of money monthly for us to do a sick job. And if they're going to be scared about, we'll have a psychological fear, step one is having psychologists deal with that. But step two is like, yo, there's no point of you paying us this money if you're not going to do it. So having a forcing function ensures they will do whatever it takes to be successful. So a helpful tip for anyone else as well. The amount of money just needs to be enough to be painful. The nominal amount doesn't matter. It's going to differ from individual to individual. But like what I used to do with a friend with my anonymous account back in 22, force each other to post every day and threads every day. And any time one of us didn't post, we'd have to give the other £10. And at the time, that was and still now, I don't want to lose £10. That is like a decent chunk of money to lose daily, and that compounds. And it sparks competition, and that is a forcing function. Otherwise, people will just come up with a million excuses. There's always an excuse. Time, whatever. I was doing something else. I had this message to respond to. Everything is a function of prioritization. So if you have a forcing function of capital or loss aversion, that will help you prioritize it correctly.
I think you're probably outside of this is almost like I know some hedge funds actually or private equity firms or high frequency trading firms do have a in-house psychologist or therapist to sit down with traders and like figure out shit. How did this happen? Like this is really almost like epiphany to figure out that
No,
you
it's a good
get
question.
founders to talk to a psychologist first before they like crypto Twitter, blah blah blah. Okay, but you're not getting a psychologist anywhere, and that's like wow. Okay, yeah. Walk me through that. How did that happen?
Yeah, so I mean, the truth is, fundamentally, crypto at its core, it's privacy. Sure, blockchain, I'd say security more than privacy. Blockchains are meant to be transparent, it's meant to be secure, blah, blah, blah. But a lot of crypto founders are fully tech focused and they just want to do whatever it takes to make their product the best. They're aware that founder-led marketing works and it is a must now, frankly. They're aware distribution is imperative, but they don't want to be one of those guys that seem to be shouting from the rooftops and seem to be a grifter like SBF, like Suzu, etc. They're cautious of that. And that is an irrational fear. It's irrational because if you're building a good product, if you're actually helping the world and helping users out and providing real value, you should talk about it. So I think it's just getting people over that. So that's the reason why we have it, is to get founders over fears, and fears exist in the vague. So we just help them play that out. How it happened is the actual founder of Fortyiq, and John Woo, is one of his close friends, helped him set it up early days as an interviewer. So our model is interviewing people, and then from that interview we drive content. So his name's Jeff. Jeff was one of the first interviewers, and as a contractor, he was working with us, but his main role elsewhere was a psychologist, a therapist, and he has I think it's a master's in psychology, or even a PhD, I want to say, but at least a couple of masters. And we were like, oh, this could actually be really, really helpful. So it was again serendipity. He tried it on a couple of clients, and results just skyrocketed. That's been a part of our approach ever since.
Damn, that's huge. Jumping on, shifting the track a little bit, I want to talk to you about Mindshare. I know you've spoken about it. I know we used to love Mindshare, and now I feel like crypto Twitter has almost like a love-hate relationship with it, with Kaito, with Mindshare itself. My personal view on it is that certain mechanics have allowed for, even though you have smart followers and even though you don't have botted KOLs anymore, but you still have people who are sort of making shilly content. And like the meta is now set up in a way where Kaido is acting as the de facto social exchange where you come, you list, and then, you know, you get access to or distribution to a shit ton of people. I wanted to understand from your perspective as a meta, as a strategy, as something that you can execute on, definitely founders and branding playing a huge role in that. How do you see the evolution of this happening as time passes by? Like, is it going to be the same because like people are getting results out of it, or is it actually going to go back to sort of like a vet2 mentality of, okay, I care about sales and I don't care about the number of mentions I'm getting on socials now?
This conversation with the team today, there's a couple interesting points there. First thing is I'm very bullish on Kaito and Cookie. I actually hold a lot of Kaito. I think their team is really, really smart, and I hope the price does well. But aside from that, I think there's a question of attribution in crypto. So let's say you are Vitalik from Ethereum. Your goal is twofold. Realistically, no one says it, but you need number to go up, number being token, PA. And two, you want more developers, more apps, etc. Let's focus on the token. Let's say Vitalik writes a sick post. Like, he's a great founder and marketer, he writes a sick post. No one's ever gonna DM saying, Vitalik, a great post. By the way, I bought some Ethereum. But that's a very normal funnel in Web. Imagine you're a lawyer and you write a really insightful post on legislation. You will get some leads from that, and ROI is attributable. Attribution in crypto is impossible, as in no one's figured it out. Like, no one's figured out how to track attribution. People who do, that's a 10 million, 100 million, maybe not 100, $10 million business easily, if you figure out attribution. Because it's hard to attribute ROI from socials to token price, even to developers. Like, where do developers touch socials? Like, no one knows. It's so dubious, which is why there's so much marketing churn in crypto. All that being said, that's why virality is important in terms of what other success metrics are there. Ideally, it's leads, but like, leads for what? A lot of protocols are pre-product. Like, what is that? How are you meant to? What's a success metric for someone that's pre-product? Like, I'll actually ask you. Imagine you are testnet, or not even testnet. Like, you just raised a Series A, but you haven't launched mainnet. What is success? That's an actual question. I'm keen to know. What do you think is success?
Yeah, no, I mean, definitely and I like to talk about how companies have two products at this stage, right? One, token is a product for you. So you have to sort of position and like be ready to market that. And the second one is your tech and what you have with that. My perception about success on that really is around, is your vision getting communicated to the audience well enough for them to pick it up and talk about it further? Like, you might
What's
not
the
have a
metric?
product,
How do
but
you
you
track that?
obviously,
Like, What's the metric you track?
Yeah, but I mean, definitely it's going to be mentioned. Like, there's no other way to do that. But I think and just to play devil's advocate here a little bit, my concern a little bit is around the fact that we've definitely made content higher quality and we've stopped a lot of the shitty things that were happening before in crypto. But now we've gotten obsessed with Mindshare to the extent where, because token volatility is something as a KPI we cannot really fully control because it's a lot of factors. Mindshare is the only metric that we feel like, okay, if we execute well enough, our mindshare goes higher, and that's the way we're attributing it. But that's not business success. So that's why I'm curious to know when you're having these conversations with your team, with founders themselves, and they're thinking about this metric. Okay, everybody understands it now, but where does it go from here? I would love to know, like, what do you think about that?
On Mindshare and Kaito specifically, it like everyone remembers Galaxy and Zili. They're like bullshit. No one should use Galaxy and Zili. I have no clue why anyone would use that now. Like outrageous waste of money if they do. At the start, it may have made sense. That's nothing to do with Galaxy or Zili's team. That's just the economic concept of diminishing marginal returns. The same thing will happen with Kaito. There will be diminishing marginal utility from Mindshare, from Yaps, from Cookie Snaps. This will fade out. I have no doubt. But that is not to say Kaito's team is smart enough to develop the next new thing. There will always be a new thing because with more users on Mindshare on the apps, yeah, margin it's a utility curve. It slowly diminishes. So I don't think there will be something else. I don't know whether it's the apps, but I think the bigger point is most businesses. There are no real businesses in crypto. They don't make money. There's no revenue. Like there's no. It's fugazi, as they say in Wolf of Wall Street. Like thinking about our ICP, we're shifting more towards less protocols. We're still open to protocols, but we more want businesses who have revenue. Because if you're sick at your job, you want attribution. Because I know we're sick. If you're a real business, I can get you leads organically, and attribution is clear, and you'll want to give me all your money. Because then it's just a machine. You put money in, you get more money out. Doesn't exist within crypto protocols. Why? Because they're not fucking real businesses. There's no revenue. If you can't track revenue, you can't track attribution, which is why there is so much marketing churn. Because what are you marketing? You're right. You are marketing stuff. There's a token and there's a product. That's like a maybe? Is there a product? Like, I don't, sometimes there is, sometimes there isn't. That's the unknown. So you have marketers being flinged around the space because one, sometimes there's nothing to market, but two, there's no metric of success. So I think that's not a marketing problem. That's a bigger problem in terms of incentive alignment. VCs should not be funding this shit. But it's not a VC problem. You can go even higher. It's an LP problem because LPs are funding the VCs. So like it's the whole incentive economics is fucked. It's messed up. It's so messed up. And the worst thing is no one is incentivized to fix the incentives. Like, so how does it change? It's just this fucking flywheel that just goes round and never gets fixed. That's the way I see it. And it just like blows my mind, but I've kind of realized that. And I think the game's a game. Like, what do you do? So we're kind of thinking more about real businesses, like data analytics platforms, like law firms, like exchanges, like market makers, people who make money. It's nuts. I even have to say that, but it's a whole like a mind fuck in my mind.
No, absolutely. And I couldn't agree more with that. I've been having almost like a constant conversation with multiple marketers over the past few episodes, and it's been the constant feedback. Like, yeah, we don't want to work with protocols who are trying to generate hype for their TGE, or products who are trying to do that and they don't really have anything to sell to people or don't have any revenue to show for it. So we're sort of, in a way, although not directly, going to the mentality of like, yeah, when a company IPOs, you look at their revenue, you look at their profit, their loss, their balance sheet, who's on their team, blah, blah, blah. And then you decide if you want to invest or not. And I think, which is a really good thing, that we're taking the principles of anybody can participate, but we're also layering it on top with, okay, it's not going to be a fugazi and we're not going to, completely invest in brainless shit, but we really have to think about, who we're working with. I think you mentioned how incentives are going to change. I think this is exactly how it's going to change, where people start actually experiencing the fact that companies that make revenue, that have a real product, that have something really tangible to sell, those are the teams that are going to succeed ultimately because they will have teams like Fortyiq and the
Is that
multiple
true?
other players.
I don't know if that's true because if you think about talent, okay, I think businesses is labor arbitrage, at least towards a start. You need the best talent to provide the best service. Let's put products to one side. If we talk specifically about services, it's all talent arbitrage. For us, we need the best talent in order to provide a quality service, in order to charge a high price so we can provide premium value. That's the flywheel. Okay, how do I get the best talent? I need to pay them above market rate to get the best talent. But you know what happens? You get Chain and Monad who raise 100 million plus Series A from some nuts VCs and who come along and be like, yo, guess what? I'm going to pay you like triple what these guys are paying. Fuck them off. Like, now what? Then incentives are still fucked. Cause like, then you have these products, chains who are paying 2 to 3x market rate and it just messes up with the whole natural competition. So I don't know if do the best services really win if the game is all about talent. I think this is where AI can make things interesting because it's equal access and there is no price barrier. Unless there is, and I just don't know about it. Maybe there's some sick AI tool that people are paying millions of dollars for. I don't know. Yeah, but that's my viewpoint.
I think I was gonna ask you about like the talent mode because you've mentioned this before as well on the incentives part. My personal view on it has been that there has to be a breaking point. There has to be like an inflection point where, okay, yes, there are teams that have raised $100 million before, and probably there are going to be more teams who raise more money out of that. But VCs and LPs function in a 10-year cycle, and there's only so much that you can burn retail, right? Over a period of time. Like I go back to like 2017, 2018, the ICO days, and it was like people thought this is never going to end. Like we're going to keep ICOs are going to keep happening, people are going to keep making money, and this is going to be an endless loop. But ultimately, it didn't work out that way, right? We had a shift. People had a few realizations, and then incentive shift, team shift, so on and so forth. On the talent front, though, when you know that you are competing with people who can just throw money at the problem and then see what sticks, right? How do you cultivate a culture that allows for retention to happen? That's one. Two, I know the Fortyiq team is not huge, but the campaigns that you run, the revenue that you've had, the success you've had as an like early-ish um marketing agency in the industry has been really an interesting case study to look at. How do you cultivate that culture? What do you talk to your team about? What are certain things that you're doing to make sure the A players that you have or the B players that you're trying to turn into A players stick around? How do you
Yeah.
tackle that? And of course, not in the financial terms, but otherwise.
No, it's a good quote. Well, to be fair, in financial terms, we pay pretty well, at least in comparison to agencies. I'll be transparent. We probably can't pay as much cash as a protocol, but we give upside. And I'll tell you one thing which is funny, which is why protocols are getting fucked. Because, and excuse my French, but protocols are doing terribly right now because guess what? Most people work in a protocol for the fantasy of, oh, I'm going to get X% in tokens and those tokens are going to be really valuable. I'll tell you what, and friends are going through this now. You're vested for 4 years in terms of equity. And let's say they don't launch a token straight away. You're vested for 4 years. Then you're going to be revested with your token. And do you really think with a 1 year cliff and 4 year tokens, your number's going to go up? Do you want to look at any token in the past year and you think that number's gone up? So I'm actually seeing people at protocols coming to us being like, yo, I know, and I've gone through these conversations as of recently as yesterday. Yo, I know my equity is useless. You guys, real businesses, actually give upside in terms of cash. Our base salary to protocols may be a bit lower, but the bonus is a percentage of revenue if you're early with us or a percentage of profit guaranteed, whereas token is dubious at best. So that's just in terms of finances. But frankly, the biggest edge that we have is leadership. Leadership in crypto is atrocious, absolutely atrocious. People have terrible, terrible cultures. The average tenure is 9 months, which is absurd. And that tells you everything you need to know. Maybe part of it is, vesting cycles and people just go around, but a large part of it is appalling leadership. My belief is you just need to give someone a decent chunk of money and give them a vision and just let them do their thing. Like just step out and just let them do their thing. I think a lot of crypto leaders are getting that massively wrong, and that's hindering us in the space.
No, 100%. I know we're a little bit short on time, but I have two more questions for you. One, I'm really interested in knowing because recently there have been good case studies of like crisis management from the founder's side. We saw, I'm forgetting which exchange that was, Bybit, I believe,
I bet. Yeah.
that had a huge hack, and the founder handled it really well, and they were able to stay afloat. How do you train a non-trained founder at crisis communication? Because anything can happen at any point in time. What's the process like over there?
Boring answer is it really depends on the situation and you have to react to a new data set. I'll use the math terms there. Boring answer is Ashley Stanhope from Hard Fork Media is a much better person to ask that question to. I think we have a lot of areas of expertise. Founder-led marketing is one of them. I think founders in crisis comms is one of them. But frankly, I'm not going to be a purport to be an expert there. Ashley Stanhope from Hard Fork Media is an expert there. The fundamentals are high integrity. Like, that's just a life principle. Like, just actually be honest and upfront straight away. Do you know why that works? Because no one else does that. You wouldn't think it's an edge. Like, you really wouldn't. But because everyone else in crypto lies, honesty is an edge. So honesty and speed to honesty is what I would say. TLDR, ask Ashley though. She's honest.
I think sometimes it's just about the simple things working out really well. So that's awesome. And then one thing that I did want to understand is for any marketers that might be watching this, right? Or young, if not younger, and are trying to basically position themselves really well to become like A players in the industry because we have a huge talent deficit and we want better marketers who can learn really well. I know you're looking for a few of them. What's your advice to these people? What do you tell them? What can they do? What should they consistently be doing? Maybe take me through a few of the lessons that you learned by trying in your early days.
Yeah, the best thing, frankly, I'd be cautious of someone my age giving advice. I prefer to document my learnings and see if that's helpful. Like, I don't want to purport to be, I don't know, world leader because I'm not. Haven't done a lot yet. I need to do a lot more, but I can document and say what worked for me. So what worked for me, I built up my own anonymous brand, which maybe I would have doxed in hindsight, but I built that up for 2 years. I learned copywriting skills. I was early, and a lot of this is just being early. I was early to DeFi and I was writing DeFi threads, GambleFi threads, providing real value for free on a daily basis. That's the playbook. Publicly provide free value on a daily basis. That's step one. Step two, get involved in communities like Telegrams, like Discords, etc., and just make friends. Again, there's a real lack of not only friendly people, not only in high integrity people, but also people who just give free value. Do all these three things and that will set you apart, and do that consistently. Because like I said, also the average tenure is 9 months. That shows a lack of consistency. If you can do something over a prolonged time period, that not only shows ambition, but it shows tenacity, which is also another deficit we have in crypto. So that's what I would say works.
That's awesome. Okay, final question for you, Dean, is what's been the most, let's say, unlikely learning that you've had in your years of running Fortyiq and just being in crypto since 2020, from your eyes, from your perspective? Like one learning that you thought that, okay, this was really not obvious to me, and this was a shocker that somebody else could also learn from.
All right, it's a very good question. There's three things which come to mind actually, and I actually think these are all tremendously helpful and have been tremendously helpful to me. So there's three major lessons I've learned. One, for leadership, everyone has a different medicine. Everyone reacts differently. For leadership, I don't really think there is a playbook. You really need to understand someone's motivation and have empathy. Empathy, empathy, empathy. Always put yourself in their shoes and understand where they're. I think that's a really tough thing to do. So I think that's number one. Number two is relating to investing. Value investing is the way forward. I was doing perps trading. I ran my own family fund. I was doing portfolio management. I was doing derivative strategies, options. That's what I studied at uni, financial economics. It's bullshit. It's absolutely bullshit. All these hedge funds don't even beat the S&P. The S&P averages 8% over a prolonged time horizon. If hedge funds with PhDs can't even beat the S&P, what makes you think you can? Like nothing. It's just so stupid. It's so stupid. And I fell prey to that. I was like, no, I have some edge. Just honestly ask yourself, what is your edge? I'll tell you the answer. You don't have a fucking edge. Unless, again, hedge fund PhDs cannot even beat the market. HFTs cannot beat the market. Algorithmic traders cannot beat the market. So just don't bother actively trading. And when you invest, value invest. Read Charlie Munger's books, read Warren Buffett experts like excerpts, and just value invest. Big major lesson for me recently. Very, very recently I learned that. Finally, don't think about how your money makes money, just make money in the first place. I think everyone's focused on multiplying their money, which is cool, which is smart. And by the way, this is a major lesson for me. So I'll actually speak in terms of first person. Last year, literally just last year, I was really dead set on focusing on my initial tiny net worth. How do I make that compound? And I spent all my time of that and not enough time on focusing on compounding my skill sets. Guess what? The government cannot tax your skill set, and that can expand infinitely. Focus on growing your skill set first, and then after that, compound your capital. And if you can combine both, value invest in the meantime, which takes up no time because it's pretty simple. You do the research once and that's it. There's no chopping and changing. You let compounding do its thing, and then you focus on skill sets and network and reputation and free value. That's the playbook. And I've only realized that very, very recently. I presume that's right. It's my hope. That's what someone else has taught me. And I'm hoping that I would have started compounding at this early age. So maybe I'll come back in 10 years and be like, fuck, no, I was wrong. Actually do this. But this is what I'm doing now.
No, I think this whole conversation has just made me realize that really the fact of the age really is a number, because a lot of the learnings that you spoke about, I've heard like 50, 60-year-old people who've been doing marketing for 25 years talk about the same things. So you definitely have a personal edge, is what I would say. But
Thank you.
Dean, thank you so much for doing this, man. This was fun. This was
No,
really
thank you
fun.
very much for having me. Good questions, mate. I enjoyed it.
Awesome. Thanks for everyone who tuned in. See you in the next episode. Bye bye.